if you want to grow a small account to a huge account, hey milkers, today we're going to be growing $100 account to 8K, 8000. That's straight, yeah, 8K. This, this, it is possible. So this is the chart analysis. This is what led us to take the trade that we took. And as you can see, what we have here is sniper entry. Look at where I took the trade, and the market retested to this my line and started buying. Actually, I think this line was actually wrong. This is what I drew before. So there was a bit of a fake breakout here in the market, and so normal people, if you're a newbie or something and you see something like this, you'll see a fake breakout. It might lead you to go and close your trade and all, but no, you shouldn't. So a fake breakout happened and the market continued to buy, and as you can see where the market is currently. So what am I trying to say? It is possible, 100% possible. We did it, and I'm going to show the whole steps here in this video. Whenever you want to analyze, you start from the higher time frame. And why I keep using the same trendline strategy here on my channel, there's a lot to it. I keep giving out the same parts because if you just understand this one, you can make money as well, like I'm doing. So this one is is easy to do. You don't need any stress. Just know how to connect the trend lines, know the rules and everything, and you get it. I've talked a lot about the rules in the other YouTube videos, and like if you're using your phone to analyze, I kind of divided the time frame analysis into two. The higher time frame, the D1, the H4, and the H1. M30 as the intermediate time frame, M5, M15, and M1 as the lower time frame. So if you want to analyze, we have to start from the higher time frame, D1, W1, anything you can name. And as you can see, I drew this trend line from the H4 time frame, and it was just vague. It wasn't giving us anything. So we'll go to a lower time frame, which is this. To draw our trend lines, I'm going to delete it to draw it again so you understand way better how these things are actually done. So you have a trend line, and yeah, I'm going to delete this one as well. So you have your trend line here, and you draw this. Remember what I keep saying about breakout and retest strategy. Once there's a breakout, you must always wait for the retest. If there's a breakout and you don't wait for the retest and you take the trade, you're as well just guessing, because a lot of trade breaks out, a lot of them. You must always wait for a retest. The retest is the confirmation to anything you want to trade. If there's no retest, you're not even trading anything at all. So here you can see where the retest happened here. This is the retest. And then if there's a retest, that means that the market has look here. This is a sell. What do I mean by breakout? Once there's a sell, a breakout is I'm done selling. I want to start buying. Or if the normal trend of the market was a buy, a breakout is I'm done buying. I want to start selling. So here it was a sell. The market sold all the way here and broke out here, and then we should be expecting the retest to that breakout. Going to the M15, you can see where the retest is here. So we're going to try to draw the trend lines to connect the trend to connect the buy. You can see, right? So now you've connected the buy, and you can see that the buy had to take place at where the retest took place. But most of the times when you see trades like this, it's actually very nice. It's actually very nice. Trades that the trend line is at the point where the retest happened. It's very, very, like, those trades are like very nice to see. And when you see them, it has high probability of actually being that thing you wanted. I remember what I keep saying: do not trade against the trend. If you want to lose your money, trade against the trend. If you actually want to make money, you must trade using the trend. If the higher time frame is telling you to buy, buy. Even if your lower time frame is telling you so, the higher time frame has a superior power to all other things. That's why people keep shouting, hey, there's a fake breakout in this, there's a fake breakout in that. What's a fake breakout? A fake breakout is when you don't respect your higher time frame. Probably your higher time frame has told you to buy, and the lower is telling you to sell, and then you're telling yourself, there's a fake breakout, there's a fake breakout. Why? It doesn't make sense. If you're going to sell at the lower time frame, contrast to what the higher time frame is telling you, it's bad. In fact, most of the times, to be on the safer side, best to trade in a safe way. And what's the safe way? When the higher is telling you to buy, and the lower is telling you to buy. Both of them are telling you to do the same thing at the same time. If the higher is telling you to sell, and the lower is telling you to buy, you're confusing yourself. If maybe for any reason you just have to take a trade that day because maybe you really wanted to trade, you must take what the higher time frame has told you. Take what the higher time frame has told you. That's like the best part. Because if you go and trade, you go and take a trade that is saying something else, no, it doesn't make sense. So guys, you can see here, there was a retest. And this is where I took my trade. You can see that there was a trend line there. That was my confirmation trend line. So now, this market has told me it's going to buy. So I should be expecting a huge buy from the market. And now the problem is finding confirmations. Where will I get my confirmation from? How do you find confirmations in every trade you've done? Probably you've analyzed very well, you've analyzed perfectly. It doesn't just end there. You need to find confirmations, you need to find entries. That's a very, very important thing in Forex market, especially for people who analyze. Because maybe you know that this market is going to buy, you've analyzed, and the market everything is leading to a buy. But how do you know that, yes, you were meant to buy here and not there? It's something that is very, very, very confusing. Now, if you look at this trade now, we've done from the higher time frame analysis. There was a breakout here, and there was a retest here. In M15, you can see here there was a retest. So now you know that the market is going to buy. So when do you buy? If you buy your market here, it's nice. But you can see where I bought the market. So I lost the entry. For me personally, I lost the entry for the market. So I had to go and pick another entry for the market. How do I do it? Very easy. You go to the lower time frame. If you want to get your entry, the entry to any trade you want to take, it must start from the lower time frame. Your entry must be at the low. If you're analyzing your entry from the higher time frame, that's very bad. If you want to grow a small account to a huge account, 3 things are very important. 3 things. You have a good analysis. Probably you've watched some of my YouTube videos and you've seen some of the things I've done. You analyze very well. Good. Fine. Secondly, you get a good entry. A perfect entry. If you want to grow small account to big, your entry is very important. And the third one, you hold the trade. In the last YouTube video that I did, I talked about how to hold the trade, how to make sure you hold for a long time and the rest. Probably you can watch it after. But now this time I'm talking about entries, how to get that particular point of the market, How do you get your entries? That's a very, very important thing in Forex market, especially for people who analyze. If you want to get your entry, the entry to any trade you want to take, it must start from the lower time frame. If you're analyzing your entry from the higher time frame, that's very bad. Because what the heck are you doing? A 1 hour time frame. That's one candlestick forms in 1 whole hour compared to what's happening in the 5 minutes time frame. So whatever is going to happen in the 5 minutes time frame must have already happened 5 minutes before happening at the 1 hour time frame, which is 1 candlestick per hour. So if you want to get your entry, it must at all times be from the lower time frame. I prefer to use either M5 or M1 for my entry. Just very rarely do I use M15, but most of the times it's best to use M5 and M1 for picking. And now I have this. Here, where there's a dotted blue is where my entry is where I took my entry. So now look here. Now this is how the market is supposedly meant to be. You can see I connected this trend line here with this one. But now when I took this trade, this part of the market was not there. this part of the market has not happened. So I just took the trade without knowing that that part of the market will happen. So I'm going to delete this and consider we're going to like do it as if it never happened, as if this is actually how the market is currently. And you're expected to take an entry. You've known that the market is going to buy and all, so you just have to take an entry, right? Cool. So you draw your trade from here. This is what I did. This is what I did. Then you go to your M1. You can see what I drew here, because there was a little sell here. So for me to get my entry, there needs to be a retest to the sell that I saw, and there was a retest here telling me, okay, now the market is right for buy. And then if you look at this trade, you can see that there was a fake breakout that happened here, and then it kind of did like a retested, but I wasn't afraid. Why? Because this here is also a fake breakout. Immediately I saw this, I had to hit my trend line here. And then after this one happened, it went through this, I had to shift my trend line here. And it kept on doing until I had to shift it here to tell you that that other part was a fake breakout. And so when you do it, you find the entry, the main points that you want to take your trade at, which is very important. Very, very important. And that's what we just found. And if you just do it like that, you can take sniper entries. Sniper entries is determined by where your entry is at. Even if your analysis is perfect, your analysis is wonderful, and your entry is far from where the market is there to buy, you're going to fail. Let's assume that I knew that this market is going to buy here at this point. Probably there was a breakout here, and then there was a retest here. So I would say, I need to buy this market here. That's way free of me, because if you buy this market here, this is not a valid entry. You might have retested, but it's not a valid entry. There's a difference between a valid trade and a valid entry. You can have a valid trade, but you won't have a valid entry. If you want to grow $10 to this, $50 to this, $20 to this, you need to know the perfect entry. The perfect entry is very important. Without it, it's as if you're just trading rubbish, because it doesn't make sense for you to be trading without an entry. So like I said earlier on, if this market had retested here and you said, I have to take this trade here, this is my entry. No, because the market actually sold all the way down here. So if you had actually bought the market here, maybe with a $70 account or a $100 account with some good lot sizes, by the time it's reaching here, you've lost a lot of money, a lot. So how do you know that this is going to be the entry point? So finding your entry is very important, and like I said, always from the 5 minutes or the 1 minute time frame. Without it, your entry is as good as nonsense. Because if you go and find an entry from the 30 minutes time frame, it doesn't make sense, because it's going to take a while before it gets there, and probably before then, accounts must have blown or something. So maybe probably in the next video, I'm going to tell you how those entries are, especially when there's no fake breakout, how you can take it at that point and it begins to sell. If you go to my channel, you go to my page, you see some of the things we've done, you can see that the place where we place our trade is actually where the market starts happening. If I'm going to say that this market is going to buy, that point I took it is where it's going to start to buy. That is sniper entry. That is your entry is so nice, it's so perfect. There's no mistake. Even if there's a mistake, maybe 1 minute candlestick mistake or 5 minutes at most candlestick mistake. If you're going to take a trade, then it takes seconds before you start buying or before you start going your direction, your entry is invalid. Sometimes people do it a lot. Some people know how to analyze trade. They probably have analyzed something very well. They've drawn the trend lines, the things, they have perfect entry and everything. And then for them to come and enter the trade, they're going to enter at a place where the market is not happening at. Maybe I say I'm going to buy a market. I bought the market. The market start buying after like 2 hours, after wasting a lot of time and probably closing your accounts. So like I keep saying, your entry is important. Again, I'm going to repeat it. You want to grow small account, you need price action. Not even small account. Why do I keep talking about small? You want to grow an account. $1,000 is even small account. I'm telling you. To some people it is. There are people who trade huge. I just keep using, you can see that most of my YouTube videos is just focused on growing small accounts. But if you go to our channel or our Instagram page, you see that we've posted the ones where we've used $500, we've used $1,000, we've used $2K, But I just, to make out time to make YouTube videos, it has to be like something we've done from small accounts to big. So that you know that it is possible to do it. It is possible. But for you to do it, you need to learn price action strategy, probably mine. Yeah, because I don't know what the other people are teaching. That's it. Price action strategy. Your entry must be perfect and you need to hold the trade. Look at this trade. I took this trade here 11th of April 1995. Today is, or where the trade is currently at, is 12th of April 1920. So that's a day, 24 hours. There was a time this trade was at $3K. There was a time it was at $6K. If I closed it at then, it would have been the last YouTube video I talked about it. I said, when the reef or brokers or the forex market, whatever, when you're losing money to them, most of the times people don't hedge their account. People don't say, let me stop this loss, so let me just close small. No. Most of the times people take risks. A high percentage of people take risks. They'll be like, okay, since the account is doing, let it go. So probably if you have a $1,000 account, there was a time that the loss was 300, the loss was 400, the loss was 500, 600, 700, 800. Now before you reach to that 1,000 to blow your account, so what does it say? So why didn't you close your account at 100? Why didn't you close it at 20? It's the same thing you should be doing when you're making profit. You shouldn't be closing your account at $100 and say, hey, at least I'm enough. This is nice. Which nice? Or you say, $500 is enough. Until your trade or your analysis is invalidated. Until then. Or maybe the money has gotten so big that maybe you just wanted to close it. Like here now, look at this trade. Probably if I want to close this trade for real, I'd have to wait for this place of this market to be invalidated. Except that there's no need closing the trade. But now I have $8K, so that's not huge, but it's a bit huge. So I'm going to close it because money has used. Or maybe if the money was around 1K or 2K, I'll be like, oh, I have to wait for it. You understand my point? If you want to grow a small account, very easy steps. Know the strategy, find the perfect entry, and hold your market and hold your trade. Probably in the next video, I'm going to talk more about the entry. I didn't really anticipate for it in this video. I was just talking about it and then found out that it's actually very useful and helpful to people. So probably in the next video, I'm going to talk about it. Make sure to subscribe. And yeah, this is Make Your Rave, and all we do is Make Your Rave. Thank you very much.